Hi guys, and welcome back to another video on the NZ Day Trader channel. So I'm Shami, and today I'm just going to be talking about how you can apply some fundamentals in order to gain confidence while going into a trade. So for many people, when you're trading and going into a stock, you know, your emotions are fluctuating up and down because you're not confident whether the stock is actually going to go up. And if you guys need some more confluence or some more confidence before going into a trade, to make sure that's going higher, then I'm going to tell you guys and make you guys comfortable as to how you guys can be a bit more confident when you're going into a trade. So for me, I've been looking at charts for over 6 years, so I can just look at a chart and I can tell how healthy it is just simply by the trend on the long-term trend that develops over the years. So basically with this one, you know, RAK, you know, it's got kind of an upwards trend, it's consolidated, and it's back into an upwards trend again. So pretty much everything on a chart signals that it has healthy fundamentals, it has buyers there, and pretty much it's likely to continue on with this trend. So I'm going to show you guys how you can even add more confidence by looking at the financials of a company to see that whether the stock is likely to continue going upwards. So first of all, what we're going to do is we're just going to look at RAK for an example. So let's just go to another tab here, and I'm just going to look at RAK, and we're just going to go to the website. So we're going to go to the website, we're going to have a look for the financials. And I've actually, over the years, I've actually looked at a few financials of different companies, and one in particular that I looked at was Serco. So Serco, when I looked at the similar financials, had an uptrending sales growth. So I'm just going to go to the Investor Center for Raycon. And let's just go to like a full annual results where we can find so annual meeting and results. Let's just go, there it is, the full fiscal year 21 annual report. So we're just going to go read more, and we're just going to go to the review. So basically what I'm looking for is pretty much this page here, the financial snapshot. So it doesn't matter, like the other stuff does matter, but the thing is when you're trading, you don't want to become an investor, because if you start going in too much into the fundamentals of a company, that means that when you go into a trade, you're like thinking more from an investor's approach, and you're not thinking that short-term sort of, you know, those, because we as traders are going for those short-term sort of positions where we can get into a stock and we can get out with a nice gain, and we're just looking for the next one. You can also trade the same stock over and over again, because if you know that like a company has like strong fundamentals, and you know that you can get into the stock, and then when it goes up you can get out, and it comes back down, it shows some sort of consolidation or good trading opportunity, then you can get back in and then sell out at a high again. So you're pretty much just like buying low, then selling, then waiting for a bit of a dip, buying again, then selling, buying, selling. And that way you can take as much advantage from the stocks as possible. So this is the part where I want to show. So basically the revenue growth. So for a growth company, it's important that they're growing their sales every year. And you can see here the revenue growing from 2017 all the way to 2021. And we also see in the news as well for Raycon that basically that their sales are likely to grow because they have a shortage on chip demand around the world. So anyways, by looking at the revenue growth here, it pretty much gives you like, this is what basically a financial snapshot is. It gives you sort of a visual representation on how well the company is performing. And this sort of stuff is the reason why the stock is trending upwards. So you can see here the trend. So you want to be finding a good trend. So the sale in a growth company, you want the sales to be growing, because if they're growing their sales at the start, then that means it's going to be more profitable in the future, which is a good thing. So basically it's not about the profitability when they started, it's more about the sales growth. So when I looked at Serco, I think around about 2 years ago, I think I saw it at about, I think maybe $3 or something, and it had a similar sort of revenue growth. And where is Serco now? When I was looking at it $3, now it's at about like $7 or $8 now. And for that reason, it just meant that looking at similar financials to Serco being a growth company, and you can see that like Raycon, and you can also see like PEB as well. So all these free companies are like growth stocks, and they have the potential to make you a lot of money into the future. And if you can buy at lows and sell at highs, then that's a really good way to kind of skip all the sort of the market downturns that you see short term. Because what we're seeing is basically when you get into a stock, you see it have a massive move higher, then just comes straight back down. Then again, it has a massive move higher and goes straight back down. So if in the long term, you know that basically the trend of the sales are growing and they're forecasting, and that, you know, the sales are continuing to grow into the future, then that means that it's a good company and you should be looking to take advantage of trading opportunities. So that's why you see me putting large amounts of money behind companies like Circo or Raycon and PEB as well, because I know that they're solid growth stocks and they usually have like good sort of trends developing in the sales, because the growth stocks are what's going to get you those really good returns of 20-30% gains. So you won't be able to see similar with like companies like Air New Zealand, because pretty much the companies that are like really low at the moment, those are more for value investors. So the value investor is going to pick them up. There might be someone else's strategy, but for me personally, I believe that sales growth in companies such as like Raycon or PEB is really important, because the profitability in the future is going to basically determine the overall value of the company. So coupled with a little bit of this and the chart, you can kind of get confidence in knowing that it's a good stock to trade, and you should be looking for opportunities whenever the stock goes down, or basically getting into these consolidation areas. And you should be getting into these and you should be waiting for the spike upwards. When you get a spike, you should be maybe looking to either scale out of your trade, and then you're looking for sort of a, you know, while the stock is down here, there's some sort of consolidation. Then you should be loading up on consolidation again, and then when it spikes high, you should be looking to sell, then wait till it goes down, and just so on and so on. And this is a really good way to make money. I mean, the thing is, you can, like, let's say you got in here early, right? You can just hold down the bottom here and then hope for the long term for it to go up. But the thing is, like, but if you can take advantage of short-term moves, then that, in my opinion, is quite good, because it's kind of, for you, it kind of delivers a cash flow. And the thing is, if you're taking short-term positions, you're pretty much safe when you take a position, you put in a stock, it goes up, you just made about 10-15 grand, then you're safe again in money, so, in cash. And that means that whenever there's like a short-term market downturn, or US, you know, the president says something and all the stocks start falling globally, then you're pretty much safe on the side, and you can take advantage if you see some sort of bullish action to the upside. So that's a little bit about how I would take a financial snapshot just to see a trend in their sales for growth stocks, or a trend in, if they're like not a growth stock anymore, then basically a trend in their overall profitability going higher. So these sort of little fundamental approaches are quite good to use with your trading. Again, you don't want to dive too much into fundamental analysis, because that means you're just an investor then. You can also trade around your investments. That's a great idea as well. Like, if you truly believe in a company, then, you know, have one account set up for investing and have one account set up for trading. Cool. So if you guys have any questions, just pop it in the comment section below. Also, I'm active on Instagram as well, so if you want to ask me anything, just flick me a message. And in the meantime, guys, happy trading.